All right, let's jump right into this explainer of Copart's Q3 2026 earnings. Today, we're going to look under the hood of a truly massive global machine. You see, Copart isn't just selling cars. They're wildly profitable off what most people would consider a total loss, wrecked and salvaged vehicles. They're running an incredibly complex logistical engine, and their latest financial results give us a pretty fascinating window into exactly how that engine is performing. Here is what we're covering today. First, the global auction leader. Second, the big Q3 numbers. Third, understanding the margins. Fourth, domestic versus international growth. And finally, the cash flow story. Let's get into it. Starting off with Section 1, the global auction leader, looking at the immense scale of Copart's operations. 4 million! I mean, that is just a staggering number. It represents the amount of units, cars, trucks, you name it, that Copart sold in just the last year alone. To put that into perspective for you, if you parked 4 million vehicles bumper to bumper, well, actually, they'd stretch entirely across continents. We're not talking about some local tow yard here. This is a mammoth operation executed across more than 250 locations in 11 different countries. From the US and Canada all the way to the UK, Brazil, Germany, and the UAE, this machine is constantly running. So who's feeding this beast? It's a massive ecosystem. You've got insurance companies offloading totaled vehicles, financial institutions, rental car companies, fleet operators, they all funnel supply in. And then Copart offers it to roughly 1 million members in over 185 countries, people like dismantlers, rebuilders, and exporters. The real beauty of this two-sided marketplace? Copart largely doesn't even own the cars. They basically just sit in the middle and collect a toll for connecting the buyers and the sellers. Moving on to Section 2, Q3 2026, the big numbers and their top-line success. $1.2 billion. That is their total revenue for just this specific 3-month window ending in April 2026. Think about that for a second. That's hundreds of millions of dollars flowing through their auction platform every single month. It's a real testament to the sheer volume of vehicles moving through those yards. Now, if you scan through their SEC income statements, you see all these huge top-line figures laid out. Service revenues combining with vehicle sales to hit that $1.2 billion mark. But staring at a dense wall of corporate spreadsheets can kind of obscure what's actually happening. So let's distill this data down to the real story of the quarter. Here is where it gets interesting. When we compare this quarter to the exact same period last year, the engine is clearly pulling in more at the top. Revenue is up 2.1%, which adds over $25 million. Gross profit is doing even better, outpacing revenue at 3.7% growth. But wait a minute, look at the bottom line. Net income attributable to Copart actually dipped by 1%, dropping about $4.2 million. So we've got a bit of a mystery on our hands, right? It's your classic business puzzle. If the machine is making more money at the very top, and even their gross profit is healthier, where exactly is that cash leaking out before it hits the bottom line? That brings us to Section 3, Understanding the Margins, where we'll dissect those operating expenses. All right, so here's where we find the friction in the gears. The actual cost of selling vehicles, that dropped nicely by 5.6%, but the costs to physically run their massive yards grew by 2.5%. And the real kicker, their general and administrative expenses, basically the back office corporate costs, surged by 7.2%. So when your admin and facility costs are growing way faster than your 2.1% revenue growth, that friction eats directly into that final net income. Section 4, Domestic versus International Growth. Where exactly is this growth coming from? If you dig into the official segment data, it breaks everything down by geographic region. It's dense, for sure, but buried right in these numbers is the absolute secret to Copart's current trajectory. Stripping it down, the shifting dynamics of the business become totally clear. The US is obviously their powerhouse, doing over $1 billion. But check this out. Year over year, total revenue in the US actually shrank a tiny bit, and operating income dipped to $390.4 million. Meanwhile, look at the international side. Revenue there jumped from $205.2 million to $234.2 million, and operating income surged to $73.8 million. Those international cylinders are firing the hardest right now, and they are single-handedly driving the company's overall revenue growth. And finally, Section 5, the cash flow story, examining the reserves. To truly understand the health of this machine, we got to open the vault. When you check out the current assets on their balance sheet, there is one number that just completely overshadows the rest of the data.
Copart is sitting on a staggering $3.35 billion in cash and equivalents. That is a total financial fortress. And what's wild is how fast they built it. Just 9 months prior, in July 2025, that number was at $2.78 billion, meaning they added over $500 million to their cash pile in less than a year. Just incredible.
So what exactly do you do when your business is throwing off that much excess fuel? Well, if we look at the cash flow statement for the first 9 months, we see exactly how leadership decided to play it.
They spent a whopping $1.63 billion buying back their own common stock. Instead of going on some aggressive acquisition spree or just hoarding every single penny in the bank, they used over $1.5 billion to buy back their own shares. In the finance world, that's basically management pushing all their chips to the middle of the table, betting as heavily as possible on their own business engine.
Which brings us to a really fascinating final thought. You've got a company that's rapidly expanding internationally to offset a slight domestic cooldown, generating so much cash they can bank $3.35 billion, and they're confident enough to spend $1.6 billion buying back their own stock. With that kind of undeniable financial muscle and internal confidence, what does that tell you about where this global auction engine is headed next? I'll leave you to ponder that one. Thanks for exploring this data with us.